Welcome to America's Commercial Real Estate Show, your source for market intel, forecasts, and strategies. Hello, I'm Michael Bull. Thank you for being with us. This session is brought to you by my company, Bull Realty, for professional asset and occupancy solutions. Give me a call, shoot me an email. Our website is bullrealty.com. Well, look, we're going to talk about interest rates. We're going to talk about the economy. We're going to talk about the cycle. And look, is this a recession? Are we in a recession? We got rising rates. How does this compare to last recessions? You know, what's going on here? Well, please welcome my guest. It's Clark Kendall. He's president and CEO of Kendall Capital, joining us on Zoom here this morning. Clark, thanks for joining us.
Michael, it's an honor to be here. Thank you for having me this morning.
Well, thank you. And, you know, whether you're investing in commercial real estate or operating commercial real estate, or you're investing in the stock market, you know, when you look at these rising rates, which are, you know, rising faster than it seems like I've ever remember. And so how should investors think about this right now?
Great question. I think what we need to do is stop, take a breath, look at the big picture. I mean, 2.5 years ago, we started a pandemic. Our country actively decided to basically keep people off food lines. You know, we sent out checks, we incentivized people not to go to work. GDP dropped 30%. Then we went through the process of vaccinating people, giving them booster shots, and Federal Reserve said, you know what, let's get people and let's get the economy back to business. They dropped interest rates to historically low Fed funds rate at 0.25%. It was unprecedented, and people did go back to work. And I think our country, the United States, did a great job compared to on a worldwide basis of managing the pandemic. And not to have a political view one way or the other, but in general, I think we did a very good job until basically Federal Reserve, you know, Jerome Powell basically said, you know what, we have inflation. It's not transitory inflation. It's embedded in our economy. We needed to bring us back to normalcy. And, you know, basically he telegraphed that in the fall of last year. And they've been slowly raising interest rates. We now have Fed funds of 2.25%. It's expected to go up to, you know, 3.5%, either the end of this year or early next year. So I think we need to take a breath as far as where we are, as far as an economic cycle, to manage what you're doing, not only the equity markets, but also the commercial real estate market.
So Clark, if you're invested in commercial real estate in the stock market, has the market already reacted to that? How are we looking forward? What do you see?
You're right. The stock market, and not so much the commercial real estate or residential market, but the stock market has dropped, you know, over 20%, depending upon which index you look at. You got to keep things in perspective. Over the last 100 years, the stock market has dropped more than 20% about once every 6 years. This is a normal market cycle as far as what's going on. I think as a commercial, you know, investor, commercial real estate investor, keep in mind that for 1% rise in interest rate, the 10-year bond will drop about 7.5%. You know, 2% rise, you're going to have a 15% drop in the 10-year fixed income bond. And, you know, many institutional investors view commercial real estate as a quasi fixed income type of investment. So I think it's very natural, you know, to expect that these things are going to decline in value. I think as a commercial real estate investor, what you got to digest and really take into consideration, this recession is different. It's been well orchestrated. You know, the academic definition of a recession is 2 quarters of decline in GDP. We had 1.9% the first quarter, 0.9% the second quarter. So this is relatively a mild recession. We've had S&P 500 earnings. Basically, we're halfway through the reporting season. Revenue is up about 10%. Corporate earnings are up. It looks like they're going to be about 6 to 8%. The average Wall Street analyst expects earnings to be up, you know, 8 to 10% for the year on a year-over-year basis. And as you know, probably better than me, we have twice as many job openings as we have unemployed people at 3.5%. So, as far as a recession goes, this is a healthy recession. It's been well orchestrated, it's been well communicated. So, I think both investors in the commercial, residential, and equity markets should look at this as an opportunity to really have good quality revenue sources and earning sources as far as their underlying investments. This is not like a 2008 where we had the no doc loans, where we had people being able to buy mortgages that had no right doing that. From everything I've read and understand in the marketplace, the mortgage brokers are doing their due diligence to make sure that the cash flows from the underlying real estate is very strong.
Right, and that was more of a real estate based, if you will, recession, right? And this one, real estate does seem to be in good shape. A lot of our clients feel pretty confident kind of going into this. They'd rather not see recession numbers. But and then when you go back to the recession, was it worse than a recession in 86, 87 when they changed the depreciation tax law? That was real estate based as well, wasn't it?
It was real estate uh, based, and Lord knows, one thing we can count on is that Congress and the administration will change the tax laws on us. It creates job opportunities for people in the commercial doing 1031 exchanges and financial planners and investors such as myself. I think we just need to, quite frankly, manage through it. But granted, tax laws will change. I think the important thing is to focus on the return of cash flow and the predictability of that cash flow during rising interest rates environments and actually declining interest rate environments. It's key for all investors, whether you're buying a 90-day treasury bill, a stock, a REIT, or a commercial real estate property, to keep that in mind.
Yeah. When I was really young, I think I was about 20, I owned a triplex, my first house I bought, and I had an interest rate of 17%. And I actually made money on the property. So people, what should they think about with today's rates and kind of historic rates?
Uh, I think, quite frankly, I think keep in the back of the mind that we do know long-term real estate and stocks outperform bonds and cash. I think we need to focus on the time horizon of what you're buying. Um, it is great if you're buying a property with 7%, borrowing money with your right hand at 17%. Make sure that your left hand's investing at better than 18%. I think it's that simple. And if you follow that as far as having property that's producing good current income, an income that will grow in the future, it's no different than buying a stock. It's no different than buying a 90-day treasury bill. I mean, utilize short-term investment products for short-term needs, long-term investment products for long-term needs. I think the big problem most investors have is they try to guess where interest rates are going to go. The short term, they try to guess where the bond market's going to go, or where. Um, but I think long term value investors in the equity markets, in the commercial real estate markets, buy good properties that are fundamentally sound and profitable, and execute it well and pay the appropriate price. Compare this to the 2000, dot-com boom and bust really is people overpaid. And I mean, do we not see that, in today's market, a lot of the cryptocurrencies? I mean, I think 5, 10 years from now, we're going to have cryptocurrency is going to be a part of it. I think you need to realize what's the cash flow. It's no different than real estate. Um, the cannabis stocks, quite frankly, you look at a lot of the cannabis stocks, people are going to smoke dope, in the future, but you got to pay a reasonable price for these things. We're going to have electric vehicles moving forward, but be conscientious of how much you're paying for that moving forward. And in today's market on the equity side, there's many companies that play an important part of the infrastructure, just like on the commercial real estate side. There's many profitable companies that play an important part of supporting the commercial real estate industry.
Right. And being an independent registered investment firm, what are you telling clients? What do you think about investing in REITs, real estate investment trusts, right now?
I think, I think the compared to the, I think the public ones are much better than the private equity ones. I know this might go against a lot of the viewers you have. Um, the private equity REITs, they tout the less volatility. Um, Quite frankly, I think if you only valued only looked at your statement once a quarter, um, the publicly traded REITs do give you that opportunity of, buying your specific type of property, properly diversifying it versus, just buying one or two commercial properties, not having to pay the syndication, not having to have the K1s at the end of the year, not being a minority versus a general partner. So I like the publicly traded REITs for most of our clients, and our clients are in that $2 to $10 million range over the private equity REITs. But I do think there's good opportunity there.
And Clark, I want to see hear your view as an independent, investor, advising clients if they're talking about real estate and the various sectors that they could get into or get out of. What do you say about retail versus office versus industrial from your desk?
You know, as I said, I think it all comes down to return of cash flow and the predictability. You probably know much better than me, but the housing, the apartment REITs are much better positioned than the commercial, strip mall cases, and even the hotels. Um, you know, the income and cash flow is much more predictable on the apartment side. I do think everything I've read is from a country's point of view. We have a lack of supply on the residential side that has not properly built up, kind of after the 2008, 2009 building. On the opposite side of the coin, the housing affordability index is, at what, a 15, 16-year low as far as the affordability index. So uh, it's interesting to see how the residential real estate market will play out. I think people need to be cautious. For individuals who are buying residential real estate, I would buy it as almost like a consumption item. Um, I wouldn't buy it on planning to flip it into the future. On the opposite side of the coin, there is a shortage of housing. I think, apartment REITs is a great place or segment of the market to be in today's market.
Yeah. Are you seeing any trends with your high net worth investors on what they think of the current market?
The current real estate market or the current,
I think the stock market and interest rates and just the economy.
I think in general, I think people are dumbfounded how quickly the equity markets have pulled back. A small when you have, quite frankly, when you have the Fed funds rate go from a quarter to 2.5 quarters, go up, 200 basis points, or percentage wise 10%, it will have a dramatic effect on the equity markets. And I would even say it's slowed down the residential market. I have yet to see where it's slowing down the commercial market, the commercial office market. So so quite frankly, I think people are kind of dumbfounded. I think properly managed. I always say, a crisis, a rise in interest rates can create opportunities. And that's why I go back to that macro point of view as far as where are we as far as this economic cycle? What type of recession is this compared to the past 20, 30 years worth of recession? And I think it can create opportunities if you look at it with your eyes wide open. I think the office real estate market is quite interesting. It's to see if people are coming back to work and how fast they've come back. And I think generally from the industry, I understand they're coming back slower than I think everybody expected as far as the office market goes. But I kind of question, on the opposite side of the kind of question, as unemployment goes up and employers start to demand more people come back to the office, I think that could actually change.
Absolutely. I certainly agree with that, Clark. I think that you hit the nail on the head there, in my opinion. I sell office buildings, and our company does tenant representation and some landlord leasing on office properties. But just selling the buildings, I think that's what we're going to see once employers, that employment market has some equilibrium in it. The employers are going to want folks back, and I think a lot of employees as well, for their careers and for advancing and just for psychologically, right? Sitting at home with the dog's fun for a while. But well, what would you leave our audience with, Clark, to think about related to the rising rates, rising this fast, or the market moving forward?
I got, two things. One is, I always emphasize in all investments boil down to return of cash flow and the predictability of the cash flow. I think whenever there's a storm in the market, some people hide in their closet and are scared of the storms. Others go outside and dance in the rain. I think it can be an opportunity. It can be an opportunity. As you point out, even the office space, it's down a little bit out of favor. I think you can buy things, relatively cheap valuation, and I think it creates opportunities. It can also create opportunities to get things out of your portfolio if you think it's overvalued for any number of reasons. So, as I said, any type of thing, as far as there's an opportunity, and I think smart people will be able to manage through it and thrive in this type of market.
Yeah, well said. I think, yeah, it's time to dance in the rain. Just make sure you don't get hit by lightning, right?
Amen.
Clark, thank you for joining us, sir. We appreciate it.
Oh, it's an honor to be on your show. You've got a great show. I've listened to you before.
All right. Well, thank you. If you'd like more information from Clark, check them out. Their website is kendallcapital.com. Well, let us know what you think. Please connect with us on your favorite social media. Until next week, be sure that you always lead, learn, and laugh, and join us for America's Commercial Real Estate Show. America's Commercial Real Estate Show is brought to you by Buxton. Take leasing, site selection, and due diligence to the next level. Make the right decisions with on-demand mobile data. Visit buxtonco.com. By Bull Realty. For proven commercial real estate asset and occupancy solutions, contact me. My email is michael@bullrealty.com. By Commercial Agent Success. Expert-level commercial real estate broker training. Cloud Access 1, up to 21 one-hour videos. Visit commercialagentsuccess.com. Thank you for reviewing, subscribing, and sharing America's Commercial Real Estate Show.